This video would be covering a small semiconductor company by the name of HIMX. You may not have heard of them since the world is dominated by NVIDIA, Broadcom, and other big semiconductor companies, but I've known of this little company for some time. They have been profitable for a long time. They had a phenomenal 2021, 2022, and 2023 is beginning to play out not so nice for them. So the stock has been down in the dumps. So I wanted to analyze the company and see if it's a good time to buy, hold, or sell this particular stock. My name is Victor. I have an MBA. I have a lot of experience, and I use that experience to analyze companies that I consider investing in. In this case, I'm going to be looking at HIMX. Do me a big favor and like this video. Consider subscribing to my channel, and I'd really appreciate that. Now let's get into HIMX. I have found a process that I take investments through in order to make a sound decision. More importantly, to be consistent in my investments. I make investments in companies, then I can see how that company performs, come back to this process and see how well I did. Learn along the way. And my process involves 4 key questions followed by a decision to buy, hold, or sell. First, do I want to be a part owner in the company? Do I really like this industry? Do I think the management team's doing a good job and operating the company well? Is debt under control and less than 3 times EBITDA? And I want a discount on the stock. Based on the answer to those questions, I buy, hold, or sell. HIMX supports the automotive industry as well as anything that has a display, whether it's a display with a curved, beautiful display that you can put on your desk, or it could be metaverse goggles that you would put on your face and watch things. Their specialization is for displays as well as sensory equipment. So the cars with sensors, cars have sensors all over the place. Just about every electronics device has sensors all over the place. We just got a new refrigerator. It's got a bunch of sensors. So these guys really do semiconductors that are used in a variety of products and industries. So HIMX has been a consistent operating company for some time. They've been profitable, very disciplined. I really like that about them. And I've known of the company starting in 2019 era. Their company just boomed since we had COVID. People were buying just about everything that you can watch. If you were watching TVs, you were probably buying some of their semiconductors. If you're buying Oculus goggles, you're probably buying their semiconductors. So their revenue really boomed in 2021, 2022, and their profitability just went off the charts in that era. So it was good for them. But since then, they've really dropped. And this year, I think their products and their industries, the product was probably oversold in 2021, 2022. So they've had to really trim down and lean down their cost because revenue has really dropped for the company. So that's what's been happening with the company over the last few years. But again, I like that the company has been disciplined for a long time. They've maintained their profitability and they have a really sound balance sheet. Their revenues have gone down. If you compare the most recent quarter that was closed about a week ago and reported a week ago, it's $235 million in revenue. And a year prior was $312 million. So the revenue is going down. But again, the company remains profitable. So it goes to show that it's a very disciplined company. They can control their cost. But previous quarter of 2022 was highly profitable. So it's been a big step down from where they were last year. And the company is really trying to continue to operate until things get better with regard to top line revenue and overall sales. The decline has been significant, almost 25% drop in revenue for the same quarter in 2023 versus the quarter in 2022. And their guidance is that they're going to be flat to declining 7% sequentially, meaning if you compare Q2 to Q3, it's either going to be flat or go down up to 7%. The company's free cash flow, they did produce some cash flow from operations, but it was negative in the quarter since they spent more money on property, plant, equipment than they had operating cash flow. So there was a free cash flow decline compared to the previous year. But in Q1, they did have a decent amount of cash flow from operations, and their CapEx isn't that high. It was $2.8 million, and they produced $66 million of free cash flow. So it is a cash flow producing business that should be able, once they get their growth going, I think they're going to be producing cash again. Now, since revenue is going down and the company basically is having some tough times, it's really good to have a great balance sheet, because right now they have more cash than they have debt. So when times are tough and you have a strong balance sheet, it can really give you a good extended period of time for you to get the business going again. And that's the case with HIMX. They have plenty of cash. They actually paid down debt, which was good to see from year to year. So the company shouldn't have any trouble staying afloat and getting their business again, growing again. Looking at HIMX, I believe that the company is actually priced at a premium of 5% currently. And the way I get there is I take their current information and put it through a valuation. I try to value the company, and I value it based on the free cash flows the company is going to produce, as well as the type of earnings per share the company is going to produce. Let's go over free cash flows first. I'm taking 2022 numbers for free cash flow and just taking 80% of that run rate, which is the run rate they're currently at. They will produce $57 million of free cash flow this year. And I'm going to grow those free cash flows in the first 4 years by 10%. After that, I'm going to grow up by 4%. And that's going to be the terminal value. That's all free cash flows past year 4. I'm going to hit it with about a 9% weighted average cost of capital or discount rate. And I'm going to discount all those free cash flows to today's value, which is today's value is $929 million of value. I'm going to add the cash that they have on the balance sheet and take away the debt. And I get to an equity value of the company of 1.1 billion. But the market cap is higher. It's 1.179 billion. So the company is actually selling at a premium of 6% if you look at the cash flow method. The earnings per share is not too good this year. It's actually quite low. And the PE is 24. I gave it a healthy PE because semiconductor companies just have really high PEs. Their historic is above 30. It's around 36, but I wanted to go really conservative and I went to 24. Based on those figures in this calculation, I get a value of the stock of $6.68. But again, the stock is trading at $6.76. So using the earnings per share method has a premium of 1%. I averaged the two. I put more weight in the free cash flow method. I take 2 parts free cash flow method, 1 part earnings per share, and I get that 5% premium, saying that, this stock is fairly priced or you'd be paying about a 5% premium on the stock. Putting HIMX through my scorecard, I think the company's terrific. I think their discipline is really, it shows a sound company. I like the semiconductor industry. I did really well with TSM several years ago. I tripled my money and then got out of the stock and did really well with it. So I really like semiconductors. I've also done really well with Broadcom, and I did really well with HIMX, by the way. I own them and they did great a year and a half ago, and I sold off my whole position. So I really like the company. I think they're well disciplined. I like the industry. The management team, again, they've got a terrific balance sheet. They know what they're doing. Debt is pretty much zero since they have more cash than they have debt. You're not getting a discount in this stock. I'm not getting a discount. So that's a big problem for me. I'm going to hold the shares that I have. I don't have a big position in HIMX, but they pay a nice dividend. So I'm willing to hold on and get that 7% dividend until I see what they're going to do as a company. And hopefully they right the ship and start growing again. Then the company is going to have a more valuable a price tag or market cap on the company. So taking a look at where the stock is traded, this one's been quite volatile. About a year ago, the stock price really came down, really down to $5 per share. So it was an opportunity to buy it at a discount. But since then, it's really gone up, and you've seen their performance with regard to revenue. I'm not sure that this is going to be going up anytime soon. My valuation is that the stock is valued at $6.32, but it's currently trading at $6.76. The stock actually is up for the year, close to 9%, and they pay a 7% dividend, which is a healthy dividend on a semiconductor company. So HIMX is a stock that really needs a couple of quarters to really show the market that they have begun to grow again. And if they show growth, I think the valuation is really going to change for the better. And it would be a stock that, you know, if I stay on it, I could potentially be sitting on a pretty good gain. But if the stock doesn't go anywhere, I collect that 7% dividend. So holding this stock makes sense for me, and I'm willing to do that. That's my video on HIMX. I hope you enjoyed it. I hope you found something interesting in it. Remember that you got to find your own process. You got to find your own system of investing in stocks. Learn from investors. Learn what, you know, your talents, your experiences, and your strengths, and then find that process of investing in stocks. It could be very profitable, very lucrative, very interesting. Keep in mind, I don't recommend that you buy any stock that I cover or sell it. This is not financial advice. This is all entertainment and educational, what I do in nature, and I hope you found it interesting. Do me a favor and like my video. Consider subscribing if you like content like this. With that, good luck investing in 2023.